starting with the numbers here, Joe. So you beat on adjusted EPS, you beat on second quarter profit, but again, it's that lowered full year forecast that's really turning heads here. Of course, that can be chalked up to recent acquisitions, but if you could give us a little bit more insight on that impact and beyond, that would definitely be helpful.
Certainly, Katie. It's a pleasure to be here with you and the team today. We are very pleased with the second quarter performance. You know, we had 7%, better than 7% growth across the enterprise, almost 9% in our pharmaceutical unit. MedTech, we were hoping for a little bit better performance, but we've got growth acceleration plans for the back half of the year that we're very, very confident in. If you look, just based on, you know, apples being apples, we would have actually raised our guidance by about a nickel. But we've made some important acquisitions, the most notable of which is Shockwave, which incurred some financing costs. And then we really fortified the long term for Johnson & Johnson with the acquisition of 2 bispecifics for atopic dermatitis. Those charges are required to be recognized in the P&L at the moment they're incurred. In the past, let's go back 18 months, 2 years ago, we would have special itemed those out like other companies had done. But following good current corporate accounting guidelines, we had to make the change now. So it's we've assured investors clearly that this is a one-time event. It's not going to linger into 2025 in any significant way. And again, they like to see Johnson & Johnson for the long term. We're very pleased with the quarter, but we don't manage for quarters. We manage for years. And some of these assets that we're bringing into the portfolio really complement our presence today in immunology as well as oncology and neuroscience.
Well, sticking with M&A, to that point, Joe, obviously you've been very active in the deal-making space. And I'm wondering what the continued capacity there is, whether you're looking to do more of these deals to grow, and if so, what areas are particularly in focus?
Yeah, so Katie, we're going to be opportunistic when the time comes, as we always are. We're very fortunate with the strength of our business. Year to date, we've generated almost $8 billion in free cash flow. That goes with a AAA credit rating. So we have the firepower to continue to do what we'd like to do. But while there's 2 notable deals in the last 18 months of Abiomed and Shockwave that are being integrated and performing to what we expected, if not better than the deal model, we actually did $7 billion of the capital deployment for 70 other deals. Those are the types of deals that may not make headlines when we close them or when we announce them, but we hope that when they have products delivered from them, they will make headlines. And you can think about some of the smaller investments we made over the last decade or 2 with Darzalex, Imbruvica, Taurus for bladder cancer. Those will be at least billion-dollar platforms, if not $5 or $10 billion platforms. And those are really where the strength of Johnson & Johnson lies. We are very pleased with the bigger acquisitions we did. We're moving into higher growth markets for MedTech, and that's really expanding our presence in cardiovascular.
I keep hearing so much about pharma, Joe, and not as much as I would like to about medical devices. I mean, and you made big acquisitions there, right? So why is that unit disappointing the street, and when is it going to outperform?
Yep. So if you look, Matt, from where we were back in 2018, we had about a 1.5% growth rate. We've consistently brought that growth rate up about a point a year. To last year, it was close to 8%. We anticipate, and what we shared with our investors at the Enterprise Business Review in December, was that we expect to play in the upper end of our peer set, 5 to 7% between the years 2022 through 2027. We were personally disappointed with a little bit better than 4% growth in the quarter, but there's 2, I'd say, identifiable, addressable items that we feel confident. One is already remediated, the other one as well as on its way. The first relates to some distributor supply inventories and them bleeding them down. We did see sequential improvement. This is specific to our contact lens business. We did see sequential improvement throughout the quarter, so while some of that bleed down occurred in April, we saw improved performance back to normal levels for that business in May and June. The other issue was China, and to be fair to the team, we had 40% growth in the second quarter of 2023 in China. As you may recall, that country was coming out of many lockdown provisions. So it was a tough comp to begin with. That being said, the volume didn't come through as we had hoped. There was some price erosion, but the volume didn't come through as we had hoped, as China is adopting some new regulation in terms of the interactions between healthcare providers and manufacturers. Everybody's being a little bit cautious at this moment. That's a good thing for for business overall. It's how you want to run a healthcare system. And we actually think that's a strength for J&J as some of this is figured out. So being in the country for more than 40 years, or about 40 years now, we think we're very well positioned to capitalize on what will be a better business model. It's how you want to conduct healthcare systems.
I think, as we saw from the vaccine and the pandemic, you're a trusted name. Americans want to reach for a Johnson & Johnson product when they can. That said, you're not involved in this weight loss competition. I know in the past you've said that the space is just too crowded if it's only weight loss, but that you'd be willing to look if these drugs can work really in other areas, like fighting alcoholism, like fighting dementia. What do you think about that now? Can you give us an update?
Yeah, so I think you're absolutely right, Matt. If you look at where we've been successful in the past, it's where we've had scientific expertise in-house. As far as obesity, we really didn't have that presence to the degree that some of the other companies have. As it moves into potentially neuroscience or immunology type of applications, we certainly would have an expertise, and that could be something that would entice us. Right now, we don't have anything in our portfolio at this point, but that doesn't mean we don't feel extremely confident in the portfolio we have that awaits us over the next 5-7 years.
Joe, also speaking of immunology, I want to talk about Stelara here because losing the patent exclusivity in the U.S. and Europe broadly across Wall Street, analysts expect this to be an overhang into next year. Can you speak to what kind of overhang you expect as generics come to market?
Yeah, so listen, we're fortunate that we work in an industry that you don't wake up one morning and say, oh my gosh, we've lost exclusivity on a major product. And I'll speak to the breadth of Johnson & Johnson across our pharmaceutical and medtech businesses. We have 25 platforms, soon to be 26, that are greater than $1 billion in annual revenue. I think back to the time when Remicade, it was really the first biologic to face biosimilar competition in 2018. People were also, at the same moment in time, roughly, fearful of what would happen to the company. At that time, we had maybe 2 products that would hit $5 billion in peak year revenue. Today, as I look at our portfolio, as we're about to launch a Stelara loss of exclusivity and the impact in the U.S. in the beginning of next year, we have at least 10 products that will be of $5 billion peak revenue. So we're ready for this. We plan to grow, even with the loss of exclusivity, in 2025. Not a lot of companies can say that, and it really speaks to the power and strength of J&J's breadth and diversity of portfolio. So it's a challenge, no doubt, but we're certainly up for that challenge, and we've been planning for it for years.